Hi, this is Anthony Parent of Parent LLP. And we've talked a lot about tax problems and how they affect U.S. citizens, but we haven't talked too much about how the citizen-based taxation and FATCA has impacted green card holders and the problems that it creates. And today we have a guest, Gary Clueit, a green card holder who has experienced some of the worst of the IRS compliance regime. Also joining us today is some of our viewers' favorite guests, John Richardson of Citizenship Solutions and Keith Redmond, a global advocate for the American overseas. Gentlemen, welcome today. Gary, thanks so much for joining us today.
My pleasure, Anthony.
Well, I'd like to just hop into your story. Why don't you tell us a little bit about how you came to America and then sort of how your whole tax situation came into being?
All right. Well, I've actually been in the United States for 34 years in total. I was living in Australia. I was an Australian resident. My wife is an Australian citizen. And I was hired due to some specific expertise I had by a company in the US to come over and work on a project, which I did. I initially came over on a work visa. But what happened is the company decided it was too much effort to keep renewing the work visa. So they hired a lawyer and applied for permanent residence. And I eventually acquired a green card about 4 years later. So I have been a tax resident of the United States for many years. But when I came to this country, I came with capital, I came with expertise. And, I worked here, and eventually I started several companies to the point where today I'm in the process of semi-retiring, so shutting down some operations, but I have 7 companies in 5 countries on 3 continents. Oh. And that in itself is a nightmare. Prior to coming to the US, I lived and worked in several other countries, numerous other countries, in fact, and been a tax resident of other countries as well. And every time I'd moved on, what I had done is filed 2 part-year tax returns, a final year return from the country I was leaving and a part-year return for the country I arrived in. So in 1984, I filed a partial year return in Australia. It was a final return, and a partial year in the US. Australia, waved goodbye to me. I've never heard from them. I've never owed them a penny. And I came to the US. Now, back in those days, the only thing that really existed was the FBAR, which is which we didn't find out for a couple of years because nobody knew about that stuff, and there was no internet. So
that's right. Yeah.
Trying to find out anything to do with the IRS in those days was exceedingly difficult. And no accountants and CPAs or tax attorneys knew anything about any of this. They didn't deal with that many expat issues anyway. So things moved along, and I have lived here. I've paid taxes. I have pretty much paid taxes at the highest marginal rates every year that I've ever lived in the United States, and I'm quite happy to do so. I'm never tried to avoid taxes. I mean, taxes are, I believe, are the price we pay for living in a civilized society, or a semi-civilized, however we want to call it. So that's never been an issue. What has happened is over the last 20, 30 years, the laws keep changing, and FATCA is one of them. There's the whole things with passive control foreign corporations and passive investments overseas and things. And it's become exceedingly difficult to navigate for anybody. But when you've got ties overseas where you own companies and assets and have bank accounts, it becomes more and more difficult. And what happens is every time Congress passes a law, it's retroactive. When I came here, none of the stuff existed. I assume there was citizen-based taxation that has been on the books for many, many years, but nobody knew what that meant in those days. People who left or left the country, even US citizens who just left and were not aware that they had to continue to file and pay taxes in the US because they're filing and paying taxes in their new country, and no other country in the world requires you to continue to pay, whatever tolls that it is once you leave. It will be tantamount to somebody living in California and then moving to Texas, and California still continuing to tax them forevermore until they somehow renounce. So, the issue is now that as I approach retirement, and I had never planned on becoming a United States citizen. I didn't come here for that. I had always planned on leaving to go back and for retirement. So now, while I'm living in the United States, and a lot of this you just acknowledge, I don't get to vote because I'm not a citizen. That's fine by me. It does impact you. I was, until fairly recently, the president of my local beekeeping association, and I was also president of the Washington State Beekeepers Association. And one of the issues we have just in terms of beekeeping and pollinators in general is the whole thing with noxious weeds and chemicals and things. I was approached by the local county noxious weed board to sit on the board to help advise approaches to dealing with noxious weeds that didn't impact pollinators. Well, I was happy to do it, but suddenly got stymied because in Washington State, you cannot even be a volunteer on a county board unless you are a US citizen. So they couldn't accept my voluntary services because I was not a citizen. Okay. As a green card holder, you'd have no right of return or right of entry into the United States. If you can be deported for an increasingly number of fairly minor infractions of the law. If you leave for more than 6 months, it's difficult to get back in. You have to still prove that you're a resident, and you'll get the 3rd degree at the airport. After 1 year of being away, if you're a green card holder, it is almost impossible to get back in because the Border Patrol or the Customs, so I guess the immigration people will likely infer that you have given up your residence and therefore you're no longer a permanent resident. The only way around this is there's a one-time opportunity before you leave to apply for a re-entry permit that's valid, if it's approved, is valid for up to 2 years, but you can only do that once. So if your employer or something were to offer a green card holder a 3-year assignment overseas, it will be impossible for the green card holder to take up that assignment because you would not get back into the country. So all of these things lead you to a situation where if you're out of the country for more than 6 months, up to 2 years, you do not get back in, period. However, that doesn't stop you being obligated to continue to file taxes, pay. You're still subject to FATCA. You still have to file your FBARs and things every year else. The other thing is, after I've left and denied entry, I've paid into Medicare for 34 years of my life, for example. I suddenly cannot, if you're living overseas, you can't get access to Medicare. But if you can't get back into the country, there's no way you can access Medicare, period.
Yeah.
It's silly things like that that just make life exceedingly complicated. So people say to me, well, why don't you just give up your green card? And the answer to that is, well, yes. But if you're approaching retirement, many people, especially if you've lived in the bigger cities in the US and owned property for a number of years, there is a deemed sale of all of your assets on the day you leave, and you have to pay an exit tax. So, and if your assets are over $2 million, which again, if you own a house in San Francisco or Seattle, you've pretty much met that without anything else. You're then deemed to be what they call a covered expatriate. And what that means is that when you die, whatever money or estate you leave to any heir that is in the United States or is a U.S. person, in other words, even if they're living overseas, but they're considered to be a U.S. resident, anything you leave them is subject to, they have to pay 40% of whatever amount they receive. That is in top of, so the issue is that because it's a tax on the heir and not the person who is dying, you cannot use tax treaties to offset anything. So for example, if I'm living in the United Kingdom when I die and I'm domiciled there, the UK will tax my estate at about 40%. I have a daughter and a grandchild in the United States. So the remaining assets that were bequeathed to them, when they receive it, they would be paying an additional 40% on what they receive. The more egregious part of that is if I leave the United States and I continue business or start new companies, and my net wealth increases, a bit or substantially over the next 20, 30 years, if I should live that long. When I die, the taxes that they have to pay is on my future increased wealth, not on what it is on the day on the day I leave.
Yeah,
it's mind-boggling.
yeah. So you have this incredible situation where if you have a green card and you leave for more than 6 months, you can't come in, but you are still subject to U.S. taxation. I mean, that's pretty insane. That is completely insane. And the other point you're bringing up is that this exit tax and then the tax on the property of non-U.S. persons, if you put those two together, you have blown through, wildly blown through what the estate tax on a U.S. person is. Right now we have an exemption of about 11.35 million, something like that. And so it affects very few people. So what you need to understand is that the threshold for the exit tax is much lower. And then the threshold for, and I believe this is something under $100,000, the exemption on the other tax that you were mentioning, it just immediately kicks in. So, wow, you have sort of the worst of every situation here. So I guess what's your plan right now?
Trying to resolve things, trying to simplify my life, but it's very expensive. I mean, for example, another example, and by the way, the exit tax applies to a U.S. citizen that's expatriating. This is not unique for a green card holder. I mean, it's generic. But I mean, here, for example, the deemed sale of assets. So, for example, if I own a house in Canada, all right, today, if I sold that house today, I would pay income tax on that in Canada, capital gains tax, and then that house would also be subject to capital gains tax in the United States. But because I had paid the tax to the CRA, Canadian Revenue Agency, I would get a credit against my U.S. taxes for that. However, if I expatriate owning that property, the IRS will determine the capital gain on the day I leave as a deemed sale, and basically you get a valuation. They say, okay, you've made X thousand dollars. This is the tax you pay on that. But because there's no actual transaction, when I come to actually physically sell the residence, I will pay the capital gains and tax in Canada where they are due and should be paid, but there will be no offsetting taxes in the US because I've already paid the taxes on that capital gain when I expatriated. So that's an absolute clear case of where there will be double taxation, where there will be, once you've expatriated and you've paid that tax, you're out of the US tax system. You can't come back and say, oh, by the way, I want a refund because now I've paid this tax to Canada. It doesn't work that way. Every stone you look under in your financial life, you find another gotcha when you leave. And it's also unnecessary because they say, okay, people are leaving the United States and taking their capital and things like that. And then on the other hand, they say, oh, well, you're just a minority. There's hundreds of thousands of people wanting to come to the US. Not all of those people are paupers. I mean, yeah. I was relatively wealthy when I came to the United States. And as I said, I accept that almost every country in the world today taxes worldwide income while you're a resident. I have no problem with that. I mean, it doesn't matter where I live. I'm going to be tied up, in that mechanism. The difference with the United States is that every other country, once you move, you take your whatever it is. They don't even, most of them, there are a couple, Australia, Canada, do some level of exit taxes based on your unrealized capital gains. And I don't have any particular thing against that, but I mean, it's the same thing. The people who are coming into the United States are suddenly being taxed on wealth and assets that were never generated in the United States. But the US is suddenly getting the benefit of those the second they move here. So given that there are so few people leaving, if you listen to everybody who seems to think this, these expats are just a small vocal minority, why not just let expats go? I mean, it all there are more people coming in, there's more wealth coming into the US than there is leaving. So why do you have to try and grab every penny, everything of the way? I'm lucky, extremely lucky. I can afford lawyers and qualified international accountants and things. The vast majority of people cannot do so. They just don't have the wherewithal to do that, and it's just not fair.
Yeah, and I think this is the important thing is that what the tax system is doing to you. Yes, it's hurting you, but as I look at it, I think we all agree that it's hurting America because this is what my experience is, and I'm pretty sure this is John's experience too, is that green card holders tend to be very sophisticated people. A good majority of them have been making money around the globe, and then finally at some point they're like, well, I just should have a business, do something in the U.S., and maybe they start out on an investment visa and then it fast tracks to a green card, and then at some point, but they move around the world, and at some point they want to go, and maybe they'll come back to the U.S. And so that's where we just see this green card issue is just absolutely insane because there's a lot of, and there's an incredible amount of people who just sort of let their green card lapse, and they're under the impression that they don't need to be in compliance, and there's really nothing the IRS can do to get them. And I don't know the truth about that. Maybe we'll ask John and Keith some of that, what the IRS could actually do to a green card holder overseas who doesn't expatriate. We'll ask that question. But this is just such a mess here. Now, I guess my question for John is this. A green card holder is not a U.S. citizen. So how is it that the IRS imposes a taxing jurisdiction on all green card holders, even those who live overseas?
Well, first of all, the Internal Revenue Code is structured in the following way. It imposes tax jurisdiction on every individual on the planet. Okay, everybody in the world is subject to U.S. taxation, with one exception, and that is that if you're a non-resident alien. Okay, so tax jurisdiction all over the world, period. If you're a non-resident alien, okay, then you'd only be taxable on U.S. source income. So the question is, and there's a difference between your immigration status as a permanent resident, which is commonly referred to as a green card holder, and your tax residence. And the tax residence rules are found in Section 7701B of the Internal Revenue Code. And what they basically say is that a permanent resident, okay, they define tax residents as everybody, including a permanent resident, okay, green card holder. And a permanent resident continues to be a U.S. tax resident until basically one of three things happens. The first is that they voluntarily surrender the green card, which is filing an I-407 form. The second is that the sort of administrative green card law courts in the U.S. Terminate the person's green card. Now, interestingly, in both of those ways of ceasing to be a U.S. tax resident, you also cease to be a U.S. resident for immigration purposes. There's a third way of terminating tax residence, and that is by essentially using a tax treaty, which means that you have to be a dual tax resident, but essentially using a tax treaty to deem yourself to be a tax resident of another country and not the United States, and what the language says, notify the secretary of this. So unless one of those three things has been done, somebody can leave the United States, somebody can actually not be let back into the United States, and still be required to file U.S. taxes on the basis of there being a U.S. tax resident, meaning their worldwide income. And there have been some very recent judicial decisions that confirm all this. For those who are threatened by this or otherwise find this interesting, I would recommend to you to read Topsnik, T-O-P-S-N-I-K, decisions 1 and 2, which, confirm various aspects of this. But, make no mistake about it. I think the mythology is that it's hard to get a green card. Let me tell you, it's a lot easier to get a green card than to escape the U.S. tax system once you're a green card holder.
Yeah. Now, what if you have your green card for less than 8 years? Are there any special rules there?
Oh, absolutely.
Yes.
Now, Gary had talked about, the question I answered a minute ago was just, why are green card holders tax residents? Now, Gary had talked about the problem of the exit tax, and that's a huge problem. But to be subject to the exit tax, you need to be not only a green card holder or permanent resident, but you need to be defined as a long-term resident. And a long-term resident is, and this is a bit of an oversimplification, but it's good enough. A long-term resident is somebody who's had a green card for 8 of the last 15 years. So, people who are educated on this, I think should give very serious consideration once they have the green card, or perhaps surrendering it, filing the I-407, whatever, before they reach year 8. Because once they reach year 8, you're subject to these absolutely draconian exit taxes. One thing I think I might add to what Gary had said, Gary's been in the United States so long that I assume that probably most of the accretion in his wealth has occurred while he's been here. But actually, green card holders do get a break that U.S. citizens don't get. They're only taxed on the increase in the value of their assets from the point that they became a permanent resident. And similarly, for green card holders, if they leave, the exit tax rules would not apply to pensions. that were related to time before they became green card holders. And thirdly, on the whole exit tax issue, and no matter which way you look at it, it's without a doubt the most draconian set of exit tax rules that has ever been designed in the world. Without a doubt, there's not even a close second in history. But because the exit tax applied to green card holders at the point of leaving the United States, at least they're being taxed on increase in wealth while they were living in the United States. Compare that to these poor American citizens who are Americans abroad, who are renouncing and subject to the exit tax. Shockingly, in their case, because they have been living outside the United States, the application of the exit tax rules is actually to the increase in normal and usually non-U.S. assets during the time they didn't even live in the United States. So the exit tax rules are actually more benign, I think, for green card holders than they are in relation to citizens. And also, citizens don't have the benefit of 8 years of, before becoming a long-term resident sort of thing. But shockingly, the way the Section 877A exit tax rules in relation to citizens is that they operate to confiscate non-U.S. assets during a period when the growth of the assets was when the owner of the asset didn't even live in the United States. I mean, this stuff, you can't make this up.
As you peel back the onion of crap, there's more crap. And you think you saw the crap. You don't know crap until this is really something. Now, what about a strategy of someone who has a green card and the 8-year comes up, they'll say, you know what, let me just get rid of this, and I know if I can come back, I know if I know I have some assets, so I'll always be able to come back and get an investor visa if I want to be in the U.S. Do you think that's a good strategy?
Well, you want me to answer? Who's that directed to?
Yeah, it's for you, John, and I guess if anyone else wants to chime in, knock yourselves out.
So that's an interesting question, and I was moderating a discussion on this very topic in California last month. And we did talk about this, but basically, so assuming you're aware enough to know that you're about to hit the 8-year mark, there are various responses to it. Some will leave, obviously. And I think that people need to give very careful consideration to that. Some will become citizens. And the reason they become citizens is, interestingly, so that they can leave and not be subject to the exit tax, right? As a U.S. citizen, you can leave. You don't pay an exit tax for leaving the United States. As a citizen.
Yeah, right. You're not, yes, you're leaving the U.S., but you're not expatriating, right?
Well, and a third thing that somebody can do is downgrade to a different status of visa, right? Okay. In other words, get rid of the green card and, get some other kind of immigration visa that would allow you to be in the country. I don't know. I mean, there are tons of these out there, depending on your circumstances. And then, of course, I guess the fourth option would be to leave and pay the exit tax before it gets even worse. And there is a certain logic in that, okay? And the one thing about the exit tax is that you get a $700,000 US floor. Right, so you're not going to pay, at least for the part that is the capital gains version, you're not going to pay an exit tax on the first $700,000, and that is, I think that something that people have to keep in mind. But in my experience with these green card expatriations, is that where they're very problematic is that the exit tax is really not one tax; it's a series of different kinds of taxes. Gary had spoken of it mainly as the capital gains aspect of it, which is a big part of it. But it also imposes tax on deferred compensation vehicles and specified tax deferred accounts. Think IRAs and 401ks and things like that. And, for a green card holder who's lived in the United States for a long time, they very often have very, very large IRAs or 401ks, and if they are subject to these exit tax rules, the full amount, the full value of those things they're required to put it on their tax return in their last year. So, this could wipe out pension plans. And I think that a large part of the purpose of the U.S. maybe not the express purpose, but the effect of it is to actually, the outright confiscation of pensions.
Yeah, that's what
we see this with the new transition tax thing as well, right?
Yeah. One of the things that several people over the years have said to me was, okay, why the hell didn't you just get out when they changed these laws? And there are several reasons for that. One is, up until relatively recently, this information was not really available to think. I only came across a lot of this when I started looking. I was just talking to my tax attorney on moving back overseas, and he started raising a lot of these things. This is literally in the last 2 years. So for some people, you're getting near the eight-year threshold and things. You've got a lot of options, okay? And that's if you're kind of an employee or something. When you're a business owner, it's a lot more difficult. I've got multiple businesses, and the reality is, for the last 45 years that I've been working, I've been focused on my businesses and running them. I mean, they're 80-hour-a-week jobs anyway. I don't have time to do research on tax law and all these things. You make certain assumptions because based on your experience of having moved countries several times. Most CPAs and the people who file your taxes every year, they know you've got foreign accounts and things, and they deal with all of the paperwork for that, but they're not aware of much of this expatriation stuff. But the fundamental issue with leaving, and even though I'm planning right now on leaving, it's incredibly complex because I have businesses, and when you have businesses, I have employees, and I'm at the point where I could literally shut down everything and just retire and walk away. Unfortunately, I'm in high tech. I've got a number of employees that have been with me that are in their mid to late 50s that have been working for me for the last 20 plus years. I can't shut them down and walk away because they'll never be employed again in high tech. So I've got to keep something going in the US even after I leave for about another 10 years until I can safely see them retired. I can't walk away from them. 10 years ago, or whenever FATCA things, when I had lots of employees, again, you got 50, 100 employees, you can't just walk away. Even now, the added complication is that after I leave, I have to maintain a U.S. presence in terms of a corporation with employees and things like that, which adds all sorts of additional complexities where I become, a non-resident, potentially an NRA if I go through all the expatriation, or at least and pay the exit taxes. But there is no simple answer. There's no way for me as a business owner to completely break free and just walk away. I mean, I suppose there are certain business people who would, and there's certain types of businesses that you could. But I've got customers that have been with me for many, many years, and I've got employees that have been with me for many, many years. So I am not in a position to have a clean break. So whatever I do, I'm still tied to the IRS.
Yeah, it's pretty amazing. Now, in Congress, they increased the exemption on the estate tax and they lowered business taxes with one reason in mind. It was always the family farm that would be lost because of the estate tax, and then all these people would lose the farm and people would lose employment. And we're seeing, it's still occurring. We're still occurring because if you decided you had too much, that's it. There's people out of a job, and them being employed at the optimum level is very unlikely again. And I think that's why Don't you see, people? This is not a green card issue. This is an American issue that affects Americans in the U.S. right now. And we got to change it. So, Keith, I got a question for you. What if somebody just says, you know what? I'm leaving and I'm not coming back. I'm going to go to, say, France. I'm not going to do anything about my green card. I'm just going to walk away. What do you think the consequences are of somebody like that?
Well, I tell you, there are quite a few people who have done that. Let me just take a step back for a second.
Yeah.
Keep in mind, I mean, Gary is very well versed and well aware of his situation because of his profession and also being in the U.S. for a number of years. I deal with people, expats, French expats, other countries' expats, who have acquired a green card, okay, but they're never told anything about this. They're not told anything about this when they receive their green card. Another subject, they're not even told anything about this should they decide to become a naturalized citizen. This does not even come up in the conversation, and it doesn't enter their sphere of thinking to even ask about it. So there are many. Go ahead, Gary.
I was going to say, it's not on the citizenship test.
No, it's not on.
It should be.
And I tell you, I deal with people. I deal with people all the time who get green cards and they know nothing. Who have acquired green cards and they know nothing about this.
Mm-hmm.
Now, to answer your question, when you do not know anything about this and you take an assignment, let's say back in your home country, you just go. You don't file taxes back to the U.S. because
who does
you
that?
don't do that. Right? Who does that? So they just move forward. Now, what can the IRS do? Well, I think it depends on the country. There are countries such as France which will not do the IRS bidding if that individual happens to be a citizen of France, full stop. So they're fine. But you have others who, you know, will live in a certain amount of fear once they find out this is what they need to do to formally relinquish their green card. I do deal with certain expats, and in particular French expats, who are kind of stuck in the U.S. because they know this. They have had their green card for more than 8 years. They have not been told that that was a key cutoff point. And all of a sudden, they find themselves in a situation where if they formally relinquish their green card, they will be obliged to pay an exit tax because they have acquired a certain amount of assets, if you will, during their time in the U.S. And those assets are not necessarily in the U.S. They've had, and I know two in particular, who have had their parents die and they have inherited a house, if you will, in France. And that's all that puts them over the threshold where they would have to pay an exit tax, and they don't have the money to pay it. So they're kind of stuck in the U.S. until something is done.
Guess, the one solution John proposes, well, if you become a U.S. citizen, then you can leave, and you could avoid that exit tax.
But now but these individuals who are now savvy realize that becoming a U.S. citizen is not going to solve their problem because they want to move back to France. Yeah. I've used France as an example.
It solves the exit tax problem, but it doesn't solve it doesn't.
But it doesn't solve the tax problem.
Correct.
Right.
Correct. Yeah. Now, Gary,
moving forward, they're in a more difficult situation.
I mean, unfortunately, there are some countries in Europe, and I'm not sure if Canada's amongst them, where they have mutual assistance treaties, where the IRS can go after you in those countries.
Except France is one of those countries. Except. If that individual is also a citizen of France, the French tax authorities will not do the IRS bidding.
Right.
Full stop.
Right.
Yeah. That's now, Gary. My question for you is: has this been all worth it? That is, if you were to meet a younger you, a 34-year younger you, who was about to come to America, would you tell him to do it, or would you just say, "Hey, just be aware"?
In this day and age, I'd say don't come.
Wow.
And no, I mean simply because the attraction of coming here was, I mean, when I started out in this in high tech, there were no computer science degrees or anything. We were all basically electrical engineers that taught ourselves software and things. There was and it was all happening. I was into networking, and ARPANET and all the foundations of the internet and things like that were all here. I mean, there was to get any information, to do anything anywhere else in the world was very difficult. So if you wanted to be in high tech, you kind of had to come here. You kind of had to go to Silicon Valley. Today, with the internet and the the infrastructure that the world has, you can do all of this from anywhere. If I were entering high tech out of college or thing today, I wouldn't be going into software. I mean, the kind of classic software like I did. I'd be going into things like robotics or artificial intelligence. And guess what? The hubs for those are not in the United States. The research, the cutting-edge research and technology is being developed in places like China and some European countries and things. I mean, things have dispersed, but the U.S. keeps shooting themselves in the foot. One of my companies, we work in the encryption area. Encryption was, until a number of years back, under the same export regulations as nuclear triggers. You could go to jail for the rest of your life for exporting encryption technology without U.S. government approval. What happened was every major computer company that worked on encryption pushed all of their engineers and all of the work out to Russia and the Eastern European countries where they got wonderful mathematicians, and anywhere but the U.S., because if it was developed outside, you couldn't trap it inside. And so today, for people to come here, it's not necessary if you want to get ahead. And I've enjoyed being here. I like the country, but it's never been what I consider my home. I want to go home.
Wow.
I 30 years ago, things I'd say, if you wanted to be in high tech, you had to come here. Today, I think you're absolutely, based on the whole issue, is certainly come to the US. Come on a sabbatical, come for a couple of years to get some experience, to experience what this country has to offer. But if you get a green card, make sure there's hell you leave before the 8 years are up, and do not have any kids while you're here.
Oh, geez, right, yeah. I think the unassailable truth is that our tax code, absolutely makes America less competitive. There's some market forces going on that you're talking about. We really can't control that, but the government can, make the world a little bit better for global business. And I mean, if that's not what tech is, I don't know. And by the way, we've had two guests who, by the way, were in the U.S. in tech and both of them found jobs in Switzerland. So you're absolutely right. Silicon Valley is not the beginning and end anymore at all. It's all around the world, and there's a lot of development going on everywhere. And so you got to really think long and hard about taking that assignment in the U.S. And it just bugs me so much that we're going to miss out on the best talent because our tax code is scaring with people with knowledge of it are scared of it. People who don't have knowledge, wake up that one day and find out, what am I going to do about this? How much is this going to cost me? And what's the risk? I could say, I know from my own experience, I have never heard of one case of a green card holder who's outside the U.S. who's been charged criminally, because I think that's an impossible case for the IRS, for the Department of Justice to win. The jury would be rather confused about why are you doing this, because the jury would be rather confused that there is such a thing, such a citizenship taxation. It's just, the unfortunate thing is, people like you have the resources to sort of put it behind them, so you don't have to worry. You deal with it as like, okay, it's a headache, I don't like it, but it doesn't sound like you're up at night with this problem, correct?
No. I mean, it's egregious, but it's not going to ruin my life, but it will ruin a lot of other people's lives. That's right.
The people who can't. And if we run into people all the time, and when they call us for a fee, just do it. And I just have to say, okay, do you have any Do you have any idea what this could cost? Do you have any familiarity with it? And, you know, when they don't, we're always surprising them with our estimates of what things cost. And it's just very unfortunate that there's a whole group of people who can't be in compliance.
Right. But, you know, the whole background to this exit tax and to the whole, you know, wealthy fat cat expat myth, you know, they've poisoned the well in DC and everywhere else that things. And it all largely was around the whole Eduardo Sovereign, the guy from Google who, when Google went public, raked in $1 billion.
Yeah, Facebook.
And then Facebook, and then expatriated to Singapore.
Yep.
The thing that people don't understand is, so, and I don't know what the exact numbers are, but from what my recollection is, you know, he made something like $1 billion in profit, paper profits, but he had to pay like 365 million in taxes based on that. Yep. So what he's left with, so he's got 500 and 600 million left. Again, most of it was on paper, although the IRS doesn't accept paper. You've got to actually cash it in to pay them.
That's right.
But whatever he had left was after-tax dollars. Why would there be any problem with him taking his money to anywhere in the world he wanted? It's been taxed. That's what you know, they use that over and over again as the wealthy people, you know, ripping off, and the consumer. It didn't rip off anybody. He paid whatever taxes was owed on that.
That's right.
And he decided to move. So, you know, an awful lot of the emotional thing in Congress and in the public against expats is all based on a very, very false premise and you know, a storyline that has been made up simply to cast expats as villains, as tax cheating villains.
Yeah, I think if I wanted to know how the world really works, I think the last people I would ask is those in Congress. They're in their own world. It's their own existence, and they just don't have their feet to the ground, and they really don't know the people, and I don't think they necessarily care. And now I think this is where this is where I think we need to go here. So guys, and this is my question for John and Keith. What are we going to do to help out green card holders like Gary? Is there anything we can do?
I'll go first on that, and I want to answer by actually adding to just making a couple points that I think we need to round this discussion out a little bit. You know, we've talked really about assets, you know, at the point that somebody leaves the United States. I think it's extremely important to note that people who are thinking of getting a green card that is moving to the United States really need to be very aware of the assets, the non-U.S. assets they retain when they do move to the United States. Because
that
all
is true.
Foreign assets, whether they're businesses, real estate, bank accounts, pensions, are going to be subject to very, very punitive U.S. tax rules. And I think that's in and of itself perhaps a good enough reason to avoid the United States. But if people are going to come, it's essential that they inventory their assets in advance that are non-U.S. assets and get very, very clear advice.
That's right. Yeah.
On how those assets will be subject to taxation once they become a U.S. tax resident.
Yeah, John, that's
critical.
Yeah, the only issue with that, John, is that you're absolutely correct, but the problem is that in the case that Keith mentioned, is when after you've come here and you've documented all your assets, but when your parents die and you suddenly acquire additional assets.
You've got to anticipate that. You've got to anticipate that as well. Second point that I would make, and I have seen this this point made numerous times, but what really struck me was on the weekend I was reading an article that appeared in the Toronto Star, and it was written by some Chicago-based immigration lawyer that was talking about how Canada had made it more advantageous here to, get permanent residency in Canada, and how Canada was sort of, winning the talent war, so to speak. And the person gave all these immigration-related answers. But I wrote a comment on the article saying, I'd also like to add that Canada is much more benign from a tax point of view for people immigrating to Canada with foreign assets. And I just gave one simple example that anybody can understand. And Anthony, I know you've written on this before, but if somebody immigrates to Canada for capital gains purposes, the basis of their assets is for the fair market value when they immigrate. You know what the situation is with the U.S., right? Mm-hmm. That the fair market value is going to be, whatever you paid for it. So they're definitely, there are so many considerations. I think taxation is one of them. I think that the United States will absolutely continue to lose the talent for reasons that include taxation. And actually, I'm going to be in India next month at one of those conferences talking to people. I'm going to make it very clear that, if they're considering, say, an EP5 program in Canada versus, in the United States versus some equivalent in Canada, they really need to consider the tax problem of getting a green card. Mm-hmm. Yep. So, yeah, I think this is huge. It's huge.
Yeah. So I am going to have to leave fairly shortly. I kind of have one things that as a summary that kind of where I am at.
Okay.
That is, we're going to, I'm going to expatriate. I have, okay. I have to just for my own sanity. But here's the ultimate tragedy. And fortunately, I have a daughter that understands. To me, the most egregious thing about all of this is the additional 40% tax on heirs. So essentially, what we have told my daughter, she's not a U.S. citizen either, but her son, my grandson, he was born here, so he's a U.S. citizen. What we have told them is they will not get a penny of inheritance while they are in the United States. If they want to receive an inheritance after we're gone, they have to expatriate and leave, because I will not allow my capital to come back and be taxed yet again. Mm. And I know a couple of other people who are essentially doing the same thing, and that will ensure that whatever is left of my estate after I've expatriated will not come back here to be taxed again under any circumstances. And it's harsh, but it's the reality.
It's the reality.
It's the reality.
Yeah, absolutely.
Because quite frankly, for another country to take 40% and then the US to take another 40%, you're not left with much anyway. So it's insanity. To me, that is, of all of this, that is the most unpalatable and the most egregious. Everything else I can kind of live with. Mm-hmm. But that's not screwing me. That's screwing.
Gary, you have given me my homework assignment, because my wheels are thinking here. Is there at all a way to plan this so that you could avoid that 40% taxation on your heirs? So that's going to be my homework. I'm going to try to figure out. If there is a way for you to avoid that legally, because I think that's rather substantial. It's just so completely obnoxious to just take someone's money like that for really no purpose at all.
It's punitive.
It's completely punitive. So that's what I'm going to try to. I'm going to try to do that over the next couple of weeks, and I'll update and I'll put an update up, and maybe we'll have you on again. I mean, you've been a fantastic guest. Thank you so much. I mean, and what a great guy you are. You are holding yourself up because you are concerned of your employees, and I really appreciate that. You have people who have been dedicated for years, and this is the thing who you hurt. Why should the U.S. tax code hurt someone like Gary? No, that doesn't make any sense to me whatsoever. So now we have we are working on tax reform 2.0. That's coming up. And that might offer some relief. Do you think that it would offer some relief, Keith, to Gary's situation? Or could we maybe slip some of that in there? That would.
I don't think it's going to offer much relief for Gary's situation.
But I think Sorry.
I think, all I want to say is that, the expectation is going to be, we're not going to get the whole enchilada, but we're going to get part of the enchilada. Okay. And then we can start working to add on more and more to it. But we got to get a base first. And this is the furthest that we've come. But unfortunately, Gary's situation, John, why don't you, do you concur with that, or do you have anything you'd like to add?
Well, I think that, I think that exit taxes are increasing throughout the world. I think that people don't understand, even if you read articles written by lawyers and accountants, it's clear they don't understand it. And so I think that it's going to be very, very difficult to get that stuff removed. I think that the best thing would be to tie it to the estate tax limitation.
Yeah.
Yep.
However, we don't know where estate taxes are going to go.
That's right. Yeah.
Well, we do know what if there's a change in government, it's going to go down again. I mean, that's pretty certain.
Oh, the exemption will go down. The taxes, right? Yeah, exactly. Yeah.
Yeah.
In 1995, it was, I think, 500,000. So I mean, there's been a tremendous range, and it's a political football, and people don't understand it. Yeah. In terms of what that would mean for now. But Gary's situation is why you're seeing what I call the family expatriation. The whole family renounces or gets rid of the green card. What the hell else are they supposed to do?
Right.
Yep.
All right.
Well,
my only comment on tax reform too is on the TTFI. I think will help a bunch of people, especially new, U.S. citizens who are planning to leave in the future. I doubt very much that I'll be able to take advantage of that, because I have a suspicion that for me to elect TTFI would be considered an expatriating act, essentially.
Unless you became a U.S. citizen.
Oh, that's right. And that's not an option.
Even still, under this proposed legislation, as I understand, again, it's not out yet, but the transition rule is more like Canada and Australia's deemed departure taxes than it is the U.S. exit tax.
Right.
We're out of time today. Thank you. I want to thank my guest today, Gary Clueit. Fantastic. Thank you so much for sharing your story with us. John Richardson, as always, I appreciate your insight. And Keith, thank you so much for all the hard work you do around the world. This is Anthony Parent of Parent LLP, IRS Medic, and I thank you for watching.